Hey, welcome back to the channel. Jeremy and Lily here. As you know, I've created a passive income stream of over $55,000 a month in rental property income. My portfolio is worth over $7.5 million. I bought 1 to 4 houses a year while working a full-time job, and on our channel, Lily and I are going to teach you how you can do it too. Okay, so in today's video, we're going to talk about the hot U.S. housing market and is there going to be a crash? So mortgage applications have actually started falling. Housing starts are still increasing. Lumber prices have fallen dramatically, and mortgage rates continue to go down. So check out this video to see what all this data is telling us. Oh, Lily wanted to remind everyone that each time you smash the like button and leave a comment, you'll be entered to win 1 pair of Apple AirPod Pros that she's giving away to one of our first 1,000 subscribers. We do post weekly, so be sure to hit the notification bell so you'll know when our next video is out. All right, guys, so I want to show you this excellent clip I found from Nick at Reventure Consulting.
This is the video you have all been waiting for. I'm officially calling it the U.S. housing market crash has started. That's right, we've passed the peak U.S. housing bubble, and from this point on, things are going to start to go south, and they're going to start to go south really, really fast. How do I know this? Well, there's 3 real-time indicators that I'm looking at right now that are all pointing in a very negative direction for the U.S. housing market. And these are indicators that if you're a home buyer, if you're a real estate investor, or if you're someone who's thinking about whether you should sell your home right now and potentially rent, these are indicators you need to be tracking because right now they're saying that the housing market has now turned and will start going down. The first of these indicators, which we're going to talk about in the video, is mortgage purchase applications. The number of people submitting an application for a mortgage so they can purchase a home. That number, after climbing for most of 2020 and early 2021, has now cratered over the last 2 months down to mid-2019 levels. So what that means is the demand for homes is declining sharply as we speak. The second thing that's going on is just as that demand is declining, the construction of new homes is surging. So that's right, new home construction over the last 12 months is at 15-year highs. And this is, of course, against everything you're reading in the news, which is saying home builders aren't building. That couldn't be further from the truth. Home builders are building, and they're building a lot, and they're building a lot just as the demand for homes is declining. That's a nasty combination. The third thing, and the third indicator we're going to talk about today, is lumber prices. That's right, the elephant in the room, lumber prices. You guys have heard a lot about this. Well, lumber prices, just like mortgage purchase applications, after surging for most of the last 6 months, well, now they are in free fall. Lumber prices are crashing, and that signifies huge instability for the housing market going forward. In this video, we're going to address each of these indicators one by one. I'm going to explain why they're important, why they're pointing to a decline in the U.S. housing market. So I suspect off the bat, a lot of you are skeptical of me saying the housing crash has started. After all, if you look around, you still see a lot of cases of like bidding wars, huge cash offers over ask, a lot of still froth in the real estate market. And I'll say, yes, that stuff is still happening. And that stuff will continue to happen, especially for really nice properties in good locations. Those type of properties will still have a lot of interest.
Totally agree.
But what we're starting to see right now is a softening in the housing market. Days on the market for properties is going up. The amount of price cuts is going up. Properties are starting to sit longer, especially if they're not, the cream of the crop property. And that's because fundamentally the demand for homes is plummeting right now. After experiencing a huge surge after COVID, which was always going to be temporary, well, that temporary surge is over, and now mortgage purchase applications are at the same levels that they were in early to mid 2019.
Yep.
That's right. New home demand has gone down to early to mid 2019 levels. That's something you're not really hearing reported in the news right now, but we know it from the Mortgage Bankers Association Mortgage Purchase Application Index.
And I don't think that's something that realtors are feeling yet. If you were to ask one on the street, they're still going to say it's very hot and I can't find enough houses to sell. It'll take a while for them to feel this.
And we're looking at that index represented on this graph. And what it shows is basically the demand for new mortgages for purchasing homes over the last 3 years. And this index kind of in this ranges from about 210 to 350. And the number on the index isn't as important as the movements in the index around this yellow line, which is kind of the long run average. What you can see is that in 2018, the mortgage purchase index was below this yellow line, meaning that there was below average demand for new home purchases. And not coincidentally, 2018 was a bad year for the U.S. housing market. Appreciation was around 2 to 3%, barely above inflation in both markets. What we then saw was a normalization in 2019. Mortgage purchase demand kind of went back up to normal levels. And then we have the huge decline that occurred April 2020, kind of the first month that COVID hit. And then, wow, record expansion in mortgage purchase application demand up above this 320 level, basically from June 2020 to April 2021. And it's this period here, which is like the housing bubble, really, that we've been experiencing over the last 9 months. Why have we experienced this bubble? Well, there was a huge surge in demand for homes, and you can see that represented in the mortgage purchase index. Again, someone wants to buy a home, they go to a bank, they apply for a mortgage to buy that home. There was a spike in that statistic, and that's why there was so much home demand and craziness in the housing market in the last fall and winter. But then what you see here, starting really fundamentally in March, started tanking down all the way to second week of June. We're at 262 on this index, which is back below the long-term average, and it's basically back below to the levels experienced in early to mid 2019. The huge surge in housing demand and prices that we've experienced over the last month can really be attributed to this surge in demand for homes and mortgages that occurred in the second half of 2020 and the first couple months of 2021. Well, that demand is back down below the long-term baseline, and I have a feeling it has further down to go, potentially getting back to these 2018 levels of demand. The surge in home demand from COVID was always going to be temporary, because basically what happened was that in a very short amount of time, a lot of people, wealthy people, accelerated their decision to buy a home. A lot of people who would have probably bought over the span of 2 or 3 years, maybe they would have bought in 2023 or something, they decided to buy in 2020 all of a sudden because of COVID. The problem is COVID had harsh economic consequences. The US is down 7 million jobs from its pre-COVID high, and quite frankly, the underlying economy stinks. It's not good. And so at some point, we're going to run out of these wealthy buyers who all decided to buy at the same time. We're going to go back to a more normal level, or potentially even a below baseline level, where now we have super high prices. The wealthy buyers have already bought. So now the burden of sustaining these home prices is on lower and middle income families. And that's exactly what we're starting to see in the mortgage purchase application data. The unsustainable nature of the post-COVID home demand surge is running out. And don't be surprised if that demand continues to decline with home prices at their record highs, especially relative to wages right now. Now, obviously, declining demand is a problem for the housing market. Think about it. All these people have geared up their expectations in the housing market for continued record demand, but demand is now back at early to mid 2019 levels, when no one was really talking about the housing market that much. That's problematic in and of itself. The amount of buyers is way down. But what's even more problematic is that as the amount of buyers is down, the amount of new construction is way up, right? Basically, builders said to themselves, because of the frenzied nature and appreciation in the housing market in the second half of 2020 and first couple months of 2021, builders said, all right, now's the time. We need to get out there, build new homes, build new condo projects, build new apartment buildings. Let's get this housing inventory out there. The problem is it takes like a while to build. You know, it takes often like 12 to 18 months to build an apartment building or a big housing development. So these builders are now building at 15-year highs, just as the demand for new homes is plummeting. That's not a good combination for the housing market. All right.
That pinch there is what happened with the last housing crash in 2009-ish, where a lot of builders were speccing on houses, putting a lot of money into them, and then the market was crashing, and they got stuck holding the bag with a lot of properties, and a lot of those guys went bankrupt. I've met some of those guys who now just work for other people because they don't want to get back into that same game, or maybe they can't because banks won't lend them money. So I think builders with spec houses really need to be careful right now, and they're already having a lot of trouble because lumber prices have increased so much. If a builder has committed on a fixed price of a house, they're definitely hurting. We've been building a house for about a year now, and it was a fixed price. And the last amount that I recall the builder telling me that his prices have gone up, and it's been mostly lumber, is $60,000. Again, that price is on him. There are a lot of other costs that I'm responsible for, such as flooring and lighting and things like that have gone up as well. And so those will come out of my pocket. But in general, I think builders building new houses right now are really suffering.
The number of housing starts, the number of housing units in America where they put the shovel in the ground, that means they've started building, right? This isn't just a permit being pulled, they've started building these projects. And this is data that comes from HUD as well as the US Census Bureau. They update it each month. And we're looking at the trailing 12-month numbers here. And let's just go back to like April 2017. We can see that housing starts over the previous 12 months in America were about 1.3 million. So we're building about 1.3 million new housing units in America. It was about like 75% single family homes, 25 to 30% apartment units. And we can see that this figure stayed pretty stable. It kind of accelerated a little bit, but stayed pretty stable through 2019. Like there was about a 5% increase in housing starts from 2017 to 2019. So, that reflects like moderate increases in demand for homes, and, they're slowly but surely, builders are slowly but surely increasing their housing supply that they're building. But then, whoa, let's look at the last 2 years. We see starting really in late 2019, actually, there started to be a surge in home building. There was a brief dip in the couple months after COVID, and then wow, basically over the last 9 to 10 months, just straight up to all the way 1.6 million housing starts over the previous 12 months in America. And I guys want you to just burn this into your brain. For all the people who keep hearing that like builders aren't building, that's not true. Yes, they are. 1.6 million housing starts over the previous 12 months. That's the most we've seen in America in over 15 years. And it represents a 17% increase from the levels that we saw 2 years prior in 2019. A 17% increase in home construction is a massive jump in only 2 years. Like we saw how it was a 5% increase from 2017 to 2019. Well, we have a 17% increase from 2019 to 2020. And the thing about these housing starts is that they reflect when a shovel is put into the ground to start construction. They don't reflect when a housing unit is completed. And this is the rub. It takes anywhere from 6 to 18 months typically to complete a housing unit depending on the scope. If it's just like a simple home that they're building on its own lot, they can do that in 6 months. If it's a bigger housing development or if it's a condo building, that takes 12 to 18. So this surge that we've seen over the last 6 months in housing starts, we actually haven't seen the impact on inventory yet. Like that's going to really come down the pike towards the end of 2021. Over the next 6 months or so, we're going to start to see all these new housing starts turn into completed homes and apartments. And then really by early 2022, we're going to start to see big increases in newly built inventory. And so this is the crazy thing. Just as home demand is declining, housing starts are going up. Doesn't take a rocket scientist to understand that that's bad for the housing market. And that's one of the reasons right now where existing home sales have declined 4 months in a row. It's one of the reasons why active listings have gone up 4 months in a row, why the number of price cuts has gone up 4 months in a row.
There were a few key things that have been declining over the last 4 months that I want to make sure you caught. The first one was the existing home sales have declined in the last 4 months, and the active number of listings have actually gone up. The last one was that price cuts have gone up over the past 4 months also. So you can definitely see the market softening with those three indicators.
Because of this declining demand, increased supply relationship, more and more builders are building to try to react to the crazy surge in demand because of COVID, but that surge in demand was always going to be temporary. So we're going to be left with a lot of inventory in 6 to 12 months with no one to buy it. So now let's link this to lumber prices, right? We have demand declining, we have supply going up, and then we have lumber prices over here. And it's actually amazing how much lumber prices have infiltrated the narrative of the housing market.
So lumber peaked about May 3rd, and it's just been falling dramatically ever since then. When you hear about lumber falling, these are lumber futures. Prices at the actual stores will take a little bit of time for those to come down. This should help to relieve some of that pressure on pushing house prices up.
Now that lumber prices are crashing, which is what they're doing, now that lumber prices are crashing, expect the narrative to go into reverse. People have now been conditioned to look at lumber prices as an indicator of where the housing market's going. Lumber prices have gone down by about 30% over the last month and a half. They're going to continue to go down. And with that, the narrative on the U.S. housing market is going to turn very negative. And you guys can see the movement in lumber prices really since October 2020, which is when prices were close to their long-term average at $478 per what's called 1,000 board feet. 1,000 board feet is like the metric they use to quote lumber prices. It was at 478 in October 2020, which was close to the long-term average. And then you can see it kind of just incrementally increased. 840 by December, 1,000 by February. And then it was really up through early May where it peaked at around 1,700 per 1,000 board feet. And that was a 300% increase over the long-term average. And it was really in this period where, yeah, I mean, it was justified to be freaked out about the increase in lumber prices. But since then, they've started plummeting. We're down now to 1,100, which is still well above the long-term average. But we're basically in kind of a free fall right now as far as lumber prices go. And that's because the amount of like DIY home projects, people building decks, people building expansion on their home, that's gone way down. A lot of like discretionary projects that people make up a large demand for lumber just aren't happening right now, because no one's going to build a deck, right, when lumber prices are this expensive. So they're destined to go down, and they're going to keep going down.
We've held up on building fences. Connor, one of our subscribers, asked me the other day about adding a fence to his property and if that would increase value. And the bottom line was yes, but I recommended that he hold off until maybe winter to let the prices soften up, as well as to try to get some labor cheaper in the winter when it's more of the off season.
The narrative that got spun about lumber prices pushing the housing market up is going to flip into reverse. And this narrative-based thinking is a huge part of the housing market, where people continually try to find a justification for why the bubble is going to continue. The number one thing that shows the sign of a bubble is when home prices escalate faster than wages and income. And that's something that's been happening in almost every market in America, and it's inescapable that at some point home prices are going to come back down to wages and income. The whole lumber argument was always a red herring. People somehow tried to claim that because maybe 500,000 to 750,000 new housing units that were being built over the previous 6 months were more expensive, that the 81 million housing units in America more generally were going to be more expensive. And of course, that was a ridiculous argument. But the point is that lumber got firmly entrenched in the narrative of the housing market over the last 6 months. And now that prices are starting to go down, and now that people are seeing that there's a decline in demand for homes, and now that new home building is surging to record levels, and now that all of these things are happening at once, and expect to see a vastly different perspective coming out of the media, coming out of realtors' mouths in the U.S. housing market. And you're already starting to see the softening. As I said, existing home sales down 4 months in a row. Active listings up 4 months in a row. Price cuts up 4 months in a row. So we are definitely out of the worst of it. The worst of it has passed. And as we continue into 2021, we're going to see a softer and softer market. Expect inventories to start going up. Over the next 3 months, the amount of homes on the market are going to start going up. I would think it probably is going to take another 3 months after that for home prices to start going down in a meaningful way. So maybe we start to see price declines at the end of 2021. However, good news for you buyers out there. I think you're going to get some relief pretty soon as far as inventory goes. And then if you have the ability to wait it out until late 2021, early to mid 2020, then you're going to start to see some price relief as well. In the meantime, you're going to want to be tracking these 3 real-time indicators. Again, it's mortgage purchase applications, it's housing starts, and it's lumber prices. These 3 things are going to really dictate where the housing market goes, fundamentally on the first 2, and from a narrative-driven perspective on the third.
I also wanted to show you what mortgage rates were doing. They're continuing to come down. So looking at a 1-year chart, the blue is the 30-year fixed mortgage. You see that coming down. It's under 3% again, which is nice. And here's a 5-year chart on the 10-year U.S. Treasury. This is important if you do a commercial loan, like the refinance I'm doing on my properties. You can see it coming down also. This is another cool chart that I saw on Nick's Instagram page that I wanted to show you. So I really like Nick's material, and I'm going to call it, I agree with him. I think we've seen the peak of the U.S. real estate from a prices perspective. I don't think we're going to have an avalanche where it falls off, but I think we're going to see some softening and kind of see it come back down. A couple of other things that are going on that's going to impact the housing market are that the annual spring and summer sales event with housing is going to be stopping here in August when the kids go back to school. That's going to take some upside pressure off, some of the demand off, that will keep prices from going up and possibly help them to come back down some. And the other thing that we've got going on is that the eviction moratorium and the foreclosure moratorium are both ending at the end of this month, July. When that happens, you're probably going to start to see some foreclosures that haven't happened in the last couple of years. That'll introduce more inventory onto the market that will help prices to soften. And then as evictions are able to continue to take place, that could also open the door for landlords to sell some properties that they may have wanted to get rid of, or landlords may want to sell some properties that they're just tired of fooling with or wanted to sell otherwise, but they were kind of stuck in this eviction moratorium and felt like they couldn't sell it or rehab it while they were in that process. Please let me know in the comments what you think is going to happen with the housing market, and feel free to ask any questions for free consulting in the comments. Don't forget to smash the like button and hit the notification bell so you'll know when the next video is out. Oh, and although I am a licensed CPA and have 3 business degrees, I'm just a guy on YouTube with my dog, so please check with your professionals before making any investment decisions. Until next time, I hope you have a great week. Thank you so much.